And good evening, good morning, and good afternoon, ladies and gentlemen. Welcome to the Elite Traders University presentation of the Pip and Run Market Outlook for the week of March 3rd, 2019. My name is Greg McLeod. It's great to be with you on this Super Sunday, and maybe you're watching this as a recording or you're watching it live. Welcome into the room. Glad to have you guys all aboard. Go ahead and crowd on in. There's plenty of seats. And let's come on in. Let's learn about the markets, what I think about the markets going on this week. Before we get started, this is a super week, guys. This is the week of non-farm payroll. Really exciting stuff. We're going to talk about how that will impact the market. That number comes out on Friday. And so usually there's big swings in the market. And a lot of times traders are cautious going into the market. So you want to be careful going into trades this week with non-farm payroll around the corner, okay? So I like scalping this market, kind of channels up and down before it gets to non-farm payroll. But just before the announcement, I like to be out, I like to be flat. I like to wait till that thing breaks because it could really, I'll talk about later on. But before we get started, I want to direct your attention to the risk disclosure on your screen to make sure that you understand all the risks associated with foreign exchange trading, and make sure that you got what's going on there, okay? All right, and after you read that, just a little bit about myself for those of you who don't know who I am. My name is Greg McLeod. I'm the founder and CEO of the Elite Traders University. I'm a 23-year trading veteran, and I'm a trader and a veteran trader and trader mentor, and I've traded everything from futures, stocks, crypto, silver, gold, pork bellies, natural gas. If it has a chart, I've traded it. A chart's a chart. And a lot of my students trade other things other than Forex. But I also spent 8 years as a currency analyst and trader coach at one of the largest retail Forex brokers in the world, FXCM. I'm just a little guy, little bitty multi-million-dollar firm in New York City. I spent also 16 years as an instructor in public education. I hold a lifetime teaching credential from the state of California, signed by the governor himself, Arnold Schwarzenegger. So I am qualified to terminate ignorance when it comes to this market. Okay. I also worked at a prop trading desk in California, and I worked at Bank of America in California as well. Now I'm a published author with articles on Yahoo, YouTube, Yahoo Finance Daily, FX and FX Street. And also you follow me on Yahoo. You follow me on YouTube. You also can follow me on Twitter, Instagram, and Facebook. Okay, so I've trained thousands of students around the world. You can be one of them too. I'll show you how to do that later on and how to even get a free coaching session with me. But I'm also the creator of the Pip and Run Forex scalping system and the Trend Spotter indicator. So if you don't want to buy and hold and you want to get in the market in and out fast, Mike, you should enroll in my mentorship. Okay, but our objective today is to create a weekly Forex trading game plan and develop a Forex scalping map so we can be able to kind of know where those significant areas where price is going to turn around. That's what we want to do, okay? It's always written that if you plan to fail, if you fail to plan, you plan to fail. That's how that's supposed to go, right? Now after we develop that map, we can identify the best pairs to trade for the week by looking at strength and bankers' levels of support and resistance. And I'll show you some trainings and how to learn how to do that I've prepared. They're free just for you. Okay. All right, let's get into what we're going to talk about. We're going to talk about the US dollar index. And even though we don't trade it, it's a basket of currencies versus the US dollar. And those currencies and how they move against the dollar can give us a clue, an indication how future movements of other currencies will make. The majors consist of 7 different currencies, and we can get an idea of where those currencies are going to go just by looking at the US dollar index. We're also going to look at the euro, the single unit currency that came about in 1999 that was tradable on the Forex market. And, it's the most liquid, most traded financial instrument in the universe, other than cold pressed lanthanum from Deep Space Nine or something like that, or dilithium crystals or whatever. But other than that, those intergalactic commodities, the euro is the #1 on this planet. And then we're going to talk about the pound versus US dollar, lots of stuff around Brexit. We're going to talk about that, Aussie dollar, the dollar yen, and there's repatriation flows coming about in the yen pairs. We'll talk about that as well. Dollar CAD correlated to oil, and we'll talk about that as well. Gold and silver backing up from those highs. We'll talk about that, and oil as well. S&P 500, which is one of the largest stock markets in the world, traded in New York City. and we'll talk about some economic releases and world news and headlines. Okay, so we have a packed agenda, so let's get right to it. All right, and we'll go right to my favorite instrument, or my favorite tool to use, my Forex Heatmap. Okay, guys, we're on my myforexheatmap.com, and this is my secret weapon, what I use in the markets in order to find what's hopping, what's popping, and what's dropping in the market. And so I'll just go ahead and log in. In fact, you can come over to myforexheatmap.com and then go ahead and you can have a $1 trial, a 7-day trial, so you can actually see how this actually can benefit your trading. Okay, so I was going to go log in. We know the market is not open right now, but will be firing up in just a few hours. So I'm going to go ahead and click the members login button, and then go ahead and access my Forex Heatmap. We'll go ahead and do that. And we can see it's an arrangement of currency pairs by percentage change. Right now, there's no percentage change. It's at 0, 0, right? But these dials will light up. The green ones will be up here. Things that are uptrending here. Things that are downtrending will be down here. And they're not moving at all. They'll be either, in this black zone. Okay, so that's on that. But what we're going to do is take a quick look at the economic calendar. There's other things here. There's an economic calendar. There is a learn to trade button. There's some charts, financial news, signal, sentiment, all kinds of really cool stuff there that can really help you out in your trading. So we want to go ahead and get to that. So we want to go ahead and look at the high impact items right now. We'll just go over those. We have Governor. This was for, let's start next week. Hey, now there we go. And then Monday, we have an RBA rate decision. That's going to be huge. Monday, March 4th. And it's widely expected from them to keep rates unchanged at 1.5%. But they haven't talked about cutting rates, but at 1.5%. And if the global economy is weakening, that's probably a good reason to cut rates in order to stimulate, inject more money into the economy and cause the loosen up borrowing, so they can sustain growth. Okay, so usually when the economy starts to weaken, interest rates go down. Okay, if the economy is too strong, then they want to raise interest rates. It acts like a brake to slow down the economic growth. And you can learn more about that in my course when I talk about the role of these financial data in your trading. Okay, so again, it's a high impact item. If you're trading Aussie dollar, I would be very careful with it. Wait for maybe an hour or so after the announcement before getting in. So, or just take Aussie dollar off your list of trading until after the announcement. Okay, because a lot of times things will go one way, and when they say one thing, they cut rates and it goes up. They lower rates and it goes down. So it doesn't really follow a logical order. So I made a mistake many years ago getting long U.S. dollar because they're going to hike rates. They hiked rates and the dollar plummeted. And I lost money on that. So I don't want you to do the same thing. So stay clear of these announcements. Stay clear of the Aussie dollar until after the actual rate announcement. That's on Monday, March 4th. Okay. And again, interest rate announcements are one of the big movers. That and employment data really move the currencies. So this could be a several hundred pip move. It could be a fizzle. It could be like the dud, Greg. This thing, you said it was going to be a fireworks. This thing was a dud. It all depends. Okay, so, and then the next day, Tuesday, we have ISM non-manufacturing PMI, Purchasing Managers Index, and that's going to come out at 10 a.m. Eastern time. So we want to look at the euro and look at the dollar, maybe dollar yen or dollar CAD to see how they affect. I would really look at the euro to see if this is a positive number. If the previous number is 56.70 comes in higher, maybe like 57 or so, you can see the dollar possibly rally higher. And that means the euro and pound and Canadian dollar would go lower. Okay, so we would want to bullish data for the U.S. dollar could stimulate, could send the dollar rising if we have that good data. Okay, and I'll show you that the euro is in a weakened state too after bouncing off of upper resistance. So it may play into that. Okay. Then we have the Bank of Canada rate decision, guys. So be careful. It's big. This could wipe accounts out really fast. So be careful. Really stay away from CAD unless somebody from the office calls you up and tells you, hey guys, we're going to hike rates. But Don't do that. That's insider trading. But there's no insider trading in Forex. Okay. Anyway, 1.75% they may cut. Or, you know, again, if it's forecasted that the global economy is weakening, you know, we had the North Korean talks, denuclearization talks with Trump breaking up, kind of ending early, and you know, they didn't finish. They didn't go to eat dinner. I mean, come on, guys. You know, they must be serious if they miss out on a free meal. Anyway, they missed out on that, and they had to walk away. Okay. So we'll see what happens, you know, on Monday that this happens. This could, you know, there could be maybe some military action by North Korea, and we could see the dollar actually go higher and the stock market kind of drop as a result. Okay. Now, let's go on to Thursday. We have the GDP out of the euro, 1.2. And if that comes in better than expected, you might see a little pop. If it's weaker than 1.2, we could see a drop in the euro. Again, euro wrestling with resistance. And also, it's a rate decision, too, on Thursday, too. Another rate decision. 3 central banks. Oh, my goodness. RBA, BOC, ECB. It's alphabet soup time, dudes. A, B, C. It's easy as 1, 2, 3. Okay. So we got ECB rate decision coming out. And again, same kind of thing. You want to be away from the euro. Stay clear. Get out of positions because this could whip around 50, 60, 70, 100 pips and really take you out. Wait for about an hour or so and see what's doing. Maybe it'll reverse, and then you can probably be able to take a trade there. And then the big granddaddy of all, non-farm payroll. Let's give it up. Woo! Woo, woo, woo. NFP on Friday, March 8th, 2019, non-farm payroll. And they moved my head out of the way, and bam, we have 304th was the big 304,000 was the big blockbuster number we got the previous month. Now we could see a continuation of higher job growth, and that would be bullish for the U.S. dollar and possibly negative for the euro, because the euro is called the anti-dollar. Okay, so we could see a further weakness. Now, if it disappoints, we could see a reversal. But again, wait for about an hour or so, then the market shakes out people. Because the BLS report from the Bureau of Labor Statistics is a really huge report. It's not just the number. It's a huge, very thick report. And so traders are going to be, professional traders, institutions are going to be reading that report. In fact, I get the report sent to me. You can go to the BLS.gov website and have it sent to you if it's not shut down by the government. But I get a copy of that. And there's a lot of data there, and usually they comb through the data. It takes a while to get through it, and then the market, then they start taking positions based on that data, based on strengths in what sectors of the economy, or there's other pieces of data in there. So you might want to wait. Okay. Now, then we have average hourly earnings. That could be very impactful too. People have more money to spend, then they can buy more stuff. They buy more stuff. It keeps the economy rolling. It keeps that ball rolling. Okay. So those are the big. This is probably the biggest week to start the week off. I mean, it's the first full week. It doesn't, after February. It's March already. Time marches on. We just got really cool that we're moved so fast. 2019 getting underway. All right, let's keep going. Let's go ahead and take a look and see if there's any holidays coming up. St. Patrick's Day is coming up, but I say any major holidays. Australia Labor Day. Oh, it's a holiday in Australia. It'll be interesting to see if we have any movement. They're going to have a rate decision on Labor Day. It's pretty interesting. International Women's Day, and there we go. The Taranaki Anniversary Day. Okay, in New Zealand. Okay, so nothing big there. Let's go ahead and go to the charts. Okay, or big thing with the charts, and give me a moment, and we're going to switch over to the charts. Okay, guys, we're going to start off with the U.S. dollar index. It is a basket of currencies versus the U.S. dollar, and it's my co-pilot when I go trading. I like checking out that U.S. dollar and seeing what it's doing. And we can see after a pullback down to the low about 95.81 we had back in February 28th, we've rebounded strongly off that area, and looks like we are challenging that 38% retracement resistance level at 96.43. Fibonacci are levels of support and resistance. In this case, these are resistance levels. I take a tool over the side, start there, draw it down here. And what happens is that price moves along these different levels of support and resistance. And so I see the dollar maybe moving up to the 96.80 area. And as we continue to have, but basically profit taking, the guys who got short here made a lot of money, right? Now, the way you, if you're long, the way you cash in on a long trade or a buy trade is by selling it. So this is like an orderly selling pattern where people have been selling, taking their profit, taking their profit, taking their profit, right? So now you've got people interested in maybe resuming this trend, buying the dip, and then taking it higher, maybe back up to this old high 97.40. But I'm looking to at least 96.78. This red line I have highlighted is a 61% Fibo, which is the golden mean, the golden ratio. And things move in 61.8% ratios, whether it's the pyramids of Egypt or like a nautilus shell, or even the way your ear is shaped, or the distance between your head, top of your head to your eyes, and your eyes to your mouth, and your mouth to your belly button. The ratio is going to come out to 618. The way rabbits reproduce, and the way plants and petals of flowers, and it's a whole growth ratio, which is found in nature, those spiral galaxies, all kinds of stuff. So I call it sacred math. So that sacred math even applies to something as mundane as the financial markets, right? So that is the growth target that I'm looking at, 96.80. And that means I'm bullish on the US dollar. If we're doing like kind of a bull versus bear kind of thing, it's an old show I used to co-host back in the daily FX days, and I'm a bull on the US dollar, and I'm looking for the dollar to go higher. Okay, now we don't trade this, but we can use this as an indicator. We can even go down to a 4-hour chart and see now you can see that we did nice big bull move. This is kind of bearish for the short term, and we may pull back a little bit. Manic Mondays, pull back on Mondays, and then I'm looking maybe a retest, a pullback, and then maybe some type of an extension. We may pull back even harder, maybe even pulling back to the 96.20 area. We may pull back on the shorter time frame chart. It's just a pullback, and then we can actually see maybe after a drop on Monday, a rally the next day after that, maybe Tuesday or Wednesday. Okay, but let's take a look. If we think that they're in the short term, the Dixie could drop, and then maybe in another couple of days we can see a rally. Let's take a look at the euro. Okay, guys, the euro. This is a 4-hour chart, but I want to go out to the daily chart, and we can see the daily. We had the big drop here down to. I'm going to move this out of the way here. We dropped down to 112. Yeah, 112.15. No, actually 112.34. And I think we could probably get down to the 112.12. Why? Because this area was tagged. And usually price likes to have a double bottom. It likes to have a little security, little like, one leg down, another leg down too, like a double bottom. And right now we didn't hit a double bottom. We got like one level a little bit higher than the other right here. Then it rallied up. People got really excited here and said, let's take it up. And then we came into some Fibonacci resistance right here. We went right to the red line and stopped at this growth, that Fibonacci sacred math number of 61% retracement, and we stopped and reversed. So I think we may have a drop to the maybe 112.15, maybe go a little bit lower than that. But I think we'll be bearish this as long as we can stay below this old high. If we can stay below the old high, and that old high would be around the 114.21. If we can stay below 114.21, we have a good shot to keep going lower. We may jump around a little bit in between here before we go there, and maybe non-farm pair before we actually get there too. So it might be pretty interesting what we see there. That is that's the daily chart. Take a look at the 4-hour. You can see that we were climbing. The angle of this ascension is not very bullish. It's just kind of like almost like a bearish flag, a bear flag, and with the result, and how we would draw that as a bear flag. Okay, let's move me out of the way there. We have this kind of a flag pattern here, and then so we exit the flag, and so we look for prices to come back down and test that 112.15. Okay, that is what I'm thinking that may occur. If not, if we break 114.21, then we can head up to like 115.16, and that would be kind of a bullish scenario there. But I think long as we can stay below 114.21 and we start breaking lows below 113.52, then we could drop precipitously on the euro. Okay, let's go ahead and keep it going, keep it spicy, and move on to our next currency pair. Let's go to GBP USD. And you saw I talked about yesterday that I was bullish on it when we had that kind of a flag pattern. We had a consolidating kind of a flag, right? So we had this kind of consolidated flag, and I said we could break out and head north and head back to our old high. You guys remember that, right? And I called that. I said, hey, this is what I'm looking at. I'm looking at this thing on for this breakout and from that flag, and that was my old target. We actually went a little bit higher than that. Another banker's level, 133.50. We got there, and then we were right here. And we were on. I was on Twitter, and let me just show you my fellow stock and chartist extraordinaire, Sean Hyman. You check Sean Hyman out if you're interested in trading stocks or options. He's an expert at that. But he made a call on the pound, and I said, yeah, it goes strong. But I was looking at, I said, I agree, brother. My Sunday video discusses the breakout, but shorting down to banker support now, and we were at in that 130, the 132.30 area. I said short down to banker support. That was my call on March 1st. And then we can go ahead and take a look at that, and we can see that was my call, that was my entry, and then we got down to that 132.25 or 132.20, yeah, 25. That's where we took profit, and we scalped it pretty good all the way down on the pound versus US dollar. We killed it on the sell. So that's what we do with Pip and Run. You can see the date on there, March 1st, 2019. And we made the call in social media, let people know, hey, this is what we're doing. And I said first banker's support target his forecast, Pip and Run both long and short. Okay, so that is and there we go. So that's what we do in scalping and learning about how to scalp the market. But let's go ahead and keep going, keep it moving with our price targets and stuff like that. All right, so what now? Okay, so now we pulled back pretty good, right, to the whole number round number. There's our banker support, 132.00, and we have to say we got in, we got short on a break, and then now we are down here. We may get a bounce, you know. Look, sellers took this down to 31.71. Okay, so we exceeded my target of the 00, the whole number round number. We exceeded that target, and then so we came back by. So this was a red candle, full body red candle, and now buyers are stepping in. So we have the makings of what we call a morning star pattern. So I think we get a bounce, maybe later on when the market starts, these charts start going. And I think we get a bit of a bounce. I don't think the bounce will give us that much, maybe 32.50. But after that, I think we take another dive, another deep dive down. Okay, I think we go down maybe to maybe the 31 whole number round number there. Okay, so that's what I'm looking at now. So I'm short-term bullish. If you want to scalp this north, I think we're bullish as long as we can stay above short-term bullish. In fact, I kind of like got in on a long at the close to basically be able to ride a pop on when the market opens up. As long as we can stay above the 31.70 area, then I think we have a good chance to go up. That not much though. Not much. I think we'll stay below 32.86, and I think, in fact, we continue to go lower. Okay, so that on the British pound, again, short term, like 1 day bullish, but the rest of the week bearish. Okay, now let's take a look at the AUD USD. I'm thinking about the same for these pairs too, in which we had the nice drop. Here's a daily chart, right? We have a kind of a wedge, kind of a falling triangle where, you know, price has been like trying to rally up and dropping, rally up and dropping. I think we get maybe a little bit of a rally, then we drop and we come down to maybe the whole number round number 0.700. The whole number, the banks want to take it down to that level, so they may pop it first, pop and drop, pump and dump. We got pump it, and they probably, and then dump it. So once people get in the long side, yeah, it's going up, then they manipulate it back down, take it down to this area. This is a old demand zone, and this flash crash that happened, man, it was huge. 15 minutes, we moved like 300 pips. That's why Forex can be very risky, right? But very rewarding if you're on the right side of the trade. Okay, so so Aussie dollar, again, they have the Ray announcement, and so the Ray announcement could take it down if they are dovish. If they talk about cutting rates, we could see this 700 level hit pretty quick, right? But again, you want to watch it. They may say, hey, we're gonna keep rates unchanged, and that could be bullish too. Oh, whew, they didn't cut, right? Then it rallies. Then they go, but they weren't that bullish, and then it turns around and drops. So watch that. The rate announcement will come out, and then a couple hours later, the statement will come out, and they'll explain why they left the rate, they did what they did to the rates, left them alone, cut or raise. They're going to explain it. That explanation is usually where we get the big moves in the market, okay? Because they're going to try to, you know, kind of jar, manipulate the words, kind of little jawboning. They call it jawboning. You know, they're going to jawbone the rate, so it's advantageous for them. So you want to watch that, okay? And let's take a look at, and it'd be interesting to look at AUD and ZD because they, you know, they trade against each other. And again, that flash crash wick needs to be retested, 109.94. And if Aussie does cut rates or they're very dovish, we could see this drop. This has been, you know, lower swing highs and lower swing lows. It's just dropping. This is like it's forming ledges and drops. And so we got a ledge here. You know, we have these ledges and with these drops. So we can see if we get a break below, say we break below 103.74, we could be on our way down to this, down to the whole number round number. With the next whole number round number is the maybe 103.50 or 103.00. Okay, so you got your round number target right there that we could probably get to. Aussie Kiwi, I'm just throwing that in there because the rate decision, we can see that the New Zealand dollar has been kicking butt on the Aussie dollar, so this may continue. Okay, so I'm just throwing that in as a bonus. Let's look at dollar yen. Dollar yen's been on a tear, but I want a warning about we do have something, a phenomenon that happens with the yen pairs that what will happen is called repatriation. And see, the Japanese fiscal year ends March 31st. So what they do is they bring all their, the yen, anything denominated in other currencies, they bring their profits that they made overseas and move it back into yen. And what happens, it causes the yen to rise. Other currencies versus the yen drop. Usually happens the March, April, somewhere in there. Sometimes a little earlier, sometimes a little later, sometimes not at all. But it's been happening for about 45 years. So if we do see repatriation, we could see a drop. But this is a pretty, you know, this was a big, long bearish candle, and buyers stepped in. This thing has been a rocket ship straight up, right? So we may rally up to the next whole number round number was 112. We're at 111.89, just knocking on the door there. So 112.50 to 113.00 looks pretty tasty. And we haven't broken this trend line, even though we do have a steep trend line. Pretty steep, and usually if you have steep trend line like that, prices will break, and there's a big profit taking that might take it back down to the trend line. Okay, this thing basically popped a wheelie, you know, went so fast that the wheels just popped up, right? And then it has to settle back down on the road and then continue up. So as long as we stay along that trend line, we're good. Once we break it, look out, Jim, because we could fall pretty fast. But we do have an overhead 114.58 overhead resistance there, and lots of congestion. There's a whole big congestion zone right in here, right? And then price could just cut right through all that and go right to the top there and head for 115, right? So I'm constructively bullish, but after 3 strong days of push up, we could see a pullback to the trend line. Look for some profit taking, but I'll be a buyer of dips on this. Okay, so the dollar yen, I'm bullish on dollar yen. Even on the pullbacks, I don't think the pullbacks will be too significant. And dollar CAD, I'm looking at this pretty bullish run there, and we took some of that too when we were scalping. We had to sit on it though. In fact, we were stopped out. I was telling you guys about it, and I go, "Hey, let's do this." And they, Greg, I got stopped out. I got stopped out too. But then I'm like, you know what? I'm gonna get back in here, but I'm not gonna tell anybody because you know you want to be able to put stuff out there for people if it works. But yeah, I said if it got above 75, 130, 175, I'd be in, and it did get above that level, and so that's what we did. We got in there, and dollar CAD I'll buy, right? And then see, we had to endure a little pullback and a breakout, and then boom, it took off and kept going. Right? One whole number, round number, 13300. The next 00. I said, forget the 200. We're gonna go for the big one here, and that's what they did. But I took 31 out of that, and that was okay. Okay, so that's that big run right there. We got another one, 3377. Whole number, round number at 3400. But the 618, the golden mean is 134.45. So we can see a push there. Maybe a little bit pullback against the 38% retracement, a little bit of a pullback, but that gives us an opportunity to like buy the pullback, buy the dip, or we can scalp the pullback. We can scalp it for 10, 15 pips on a short. Again, I'm short term short, but medium term long, and I think we go up here. Okay, so let's drop it down to a 4-hour chart, and see, there we go. We see we're at that 38% retracement, and we might get a little bit of pullback, and any pullback we get against this whole 13300, right? Let's say we pull back to 75 or so, or 50, 3250, then I look to get in this baby on a pullback for lock and load for 3450. Okay, that's for dollar CAD. Okay, based on the pullback, this is very strong. We should see some type of a Fibonacci retracement. We can even take a Fibonacci from this low to this high and see. And this is pretty bullish. So 30, again, round number 3229 is not a round number, but 3207 is really close to the 00, 50% retracement. Also, price returns back to the scene of the crime. This was resistance. This area was resistance for a long time. And so price may come back and retest the scene of the crime. So that's 132.38. So we could come down, test that red line, and bounce there, and we can add get into our position there with a nice stop down below the 50% retracement and look for a move higher. Okay, so we may can scalp down to there. It's a scalp target. You can scalp from here down and then reverse and get long. But I would not look for a full reversal. There's so much congestion down there. There are lots of people that got stops and stuff, so that looks like it's going to hold unless something tremendous happens of non-farm payroll that could cut through all this. But this is a lot of structure that they put in there, lots of stuff. So they're building this base. They build the base for the race. The wider the base, the higher the race. Okay, so we'll see that for dollar CAD. So we looked at yen, look at CAD, we look at Aussie dollar, we looked at pound, looked at the euro, and let's go ahead and take a quick gander at the gold. Or actually, let's look at oil. I want to always look at U.S. oil after I look at the Canadian dollar, right? Because the dollar and CAD, the oil and CAD are correlated, and commodities are priced in oil. Commodities are priced in dollars, right? Like oil, Oil's priced in dollars. So when the dollar goes up, these commodities fall in value. We can see this thing has been going 1, 2, 3, 4, 5, 6, 7, 8 days between 58 and 55. So about $3 range. We've been going a $3 range. So a breakout is bound to occur with this type of a consolidation. I'm looking for a south side break. If dollar continues to strengthen, we might get a little bit of a rebound later on. But as long as we stay below, say, 58, we have a shot at 50, right? As the dollar continues to strengthen, and that's what I'm looking at for oil. And you can see a double top, and we can see that drop that's forming on it. This is a 4-hour chart. All right. Again, that's one commodity, and again, it's based that we looked at the U.S. dollar, so the dollar was strengthening, though we could see a little bit of weakening initially. Okay, like a low volume move because it's Monday. People are taking the day off. All right, let's take a look at UK oil, which is Brent crude, CFD. Looks like it's positioning itself for a little bit of a rebound from that 64.84 area. Got a little harami. This is a bullish pattern, but against this downward lower low, lower high, kind of trend reversal, trend line break, this might rally a little higher, maybe at 65.50, and then drop and keep going, and may come back and test the breakout area. This is where we found lots of resistance here in the 60 or in 63.55, here, and here, and here, and now it's on its own, and then it's like going off to college. Oh, I want to go back home. So they may come back home, find out that, hey, my room has been turned into a sewing den or a man cave. I'm getting out of here. I'm moving back out again, and we move back up to like 72 or 74. But right now, after a big run up in oil, we're seeing some profit taking going on there. So I see a pullback, short-term bearish, maybe even back to the bottom of the channel too. But then long-term, I am bullish. Okay, so that's where I think on what's going to happen there. SPX 50 or XPX 500. Sorry, 50. I'm looking at, we get this really sharp V bottom. I mean, just blew out all these levels. Now we're get back 28.12. We got topping here, topping here, topping here. Lots of topping, man. It's like, oh man, it's like a pecan pie has so much topping on it, right? Or a la mode, brownie a la mode. But so I think this 28, this number, this resistance area will hold, and we could see a pullback, maybe 27.20. 30, that's a 23% retracement. Usually the S&P gives you really shallow pullbacks, and so what we want to do is maybe add the 11.4% Fibo. So maybe we don't go all the way down like that, but maybe we go like 27.60 or so. Yeah, but if we break this, then we fill this gap down and we go 28.76, and then we could see 29.60. Now, if we continue to fill this gap and fill this one here, then we can see 3,000 easily on the S&P, right? You would like to see a break, a little bit of a pullback, but whatever pullback we get will be we shallow pullbacks. So I'm short-term bearish, longer-term bullish. I think we do, again, a pullback in extension. If we do project down for a bigger pullback, which is more healthy, we could correct all the way down at 25.26, but I think, and we might not, we might be topping the January rally, Christmas rally. It's kind of like it's stalled out because Christmas really kind of like sucked. So we could probably see it maybe if we saw a deeper correction, then we were setting up for maybe a really big summer rally that'll take us over 3,000. So that's I'm going out on a limb on that one. Okay. And so that's our analysis there. What's going on with our currencies, our indices, and we got a lot of good stuff. So having a game plan of how to trade and where to trade in the markets, we've given you a pretty good game plan. But if you need more help and you need mentorship and help, and everybody needs help, that's how you get better and able to have great success, is to have a mentor or coach, and like I did. We have the Pip and Run training system and mentorship, the Pip and Run Forex Scalping Boot Camp, and it's we're taking enrollment for this March for our season 3. This is awesome. So we're a lot of people had interest. We also have scholarships available. So you want to be the first. We got about 4 or 5 positions for this month of March for this new group. So you want to go ahead and go to www.elitetradersuniversity.com/apply. So what you'll get in here, you'll get how to develop a Wall Street institutional mindset, access to our Forex simulator technology, our 12 weeks of live group coaching, 3 one-on-one private coaching sessions, so it's one-on-one with me, a VIP private chart community where you talk about charts, not just about kitties and stuff like that. Kitties are nice, but we want to make money, so we want to be in a room that's talking about money and with that's active like our room is. Also, you'll include my 482-page never before release Pip and Run strategy guide, and also our Pip and Run indicator templates, plus 10 Pip and Run video modules, and all that you'll get as part of this coaching program. And so we sign up. There's a few spots available. I only work with a few people each quarter. So you want to get the few spaces that are available. Again, the group coaching, the VIP Scalpers chart room, 10 plus video modules, my Forex Heatmap access as well, and the 42-page Pip and Run ebook, premium email support, bonus one-on-one private coaching calls, plus my Pip and Run secret indicators and templates, and plus we have a 50% scholarship to the first 5 students for this new season. So if you want to apply, it's by application only. You can go to elitetradersuniversity.com/apply. And when you apply, you can pick a time and a date where we can talk, and we'll make that like a little group coaching, a private coaching call. So that has $1,000 value, and then I can analyze what's going on in your trading and give you some directions. And if it fits, we can work together. Then we'll tell you more about the program and how to get involved with us. And if you want to continue doing it on your own, you most certainly can. It might take you a few years, but hey, that's you have that choice. But there's no pressure or anything like that. So again, www.elitetradersuniversity.com/apply, and remember you can reach out to us on Twitter, and you can go to eliteuniversity.com to our website, or you can contact me, Greg, at elitetradersuniversity.com. Okay. So again, we'll look forward to seeing you later. Peace and pips. Happy pipping, and we'll see you in the market. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!